Sunday, April 16th, 2023, Maneco 64, home of alternative economics and contrarian views. We're going to look at commodities today. I've been covering commodities for about 4 years, maybe 3.5. I speculated back in 2019 that the end of the bull market in bonds, or the 40 years of easy credit, was coming to an end, mainly because the cycles told me so. If you go back to 1941 too, bond yields bottomed and then they rose for 40 years up until 1981, and I thought we should be near the end of this bull market, and last year showed that that was true. We saw stocks and bonds drop the most in many decades. The 60-40 split of investing in stocks and bonds has been broken, in my opinion, and commodities are going to benefit greatly from that. Not that the world is just going to buy commodities, but just that a lot of the capital is going to start flowing more into commodities. And coupled with what's been happening geopolitically, not just after the start of the war in the Ukraine, but even before that, we were seeing that the BRICS and the Chinese, Russians, they had been already putting the details together, trying to get away from total dependence on the dollar. It doesn't mean they're going to abandon the dollar completely, but they want to have another way of trading amongst themselves. And that basically took root, I think, after the 2008 crisis and also 2014, and all the sanctions that have been imposed, especially on Russia and other countries. The rest of the world has felt necessary to go their own way, and we're seeing that it's really accelerating now. We saw the Chinese president meet the Saudi prince and king in December last year. They've set up kind of like a petro-yuan. We saw in 2021, after the US left Afghanistan, that the Russians and the Saudis signed a military defense agreement. So the world's changing. We've seen recently Brazil, which is a huge commodity exporting country, say that they're going to deal in their own currency with China. So it's all really changing, and the West, unless we join the BRICS and make peace with Russia and China and other countries, which is something very unlikely. The West needs to diversify. The West needs to get involved in the commodity space, not just because infrastructure, to build infrastructure, you need to dig, you need resources, you need raw materials, but also because that's the way capital is going to flow. And I think, as you can see by this chart, we've had this consolidation since May or June last year, and I think we're now breaking out, and we're just in the beginning of a major bull market in commodities. That's going to make hard assets, of course, more attractive, and seeing that the everything bubble that we've had for a couple of decades created $300 trillion in liquidity and paper assets. Just a small percentage of that flowing into commodities could create a massive move. So it's with that in mind that I've recently partnered with Uranium Royalty Corp, or UROY. UROY is the first and only royalty and streaming company in the uranium space. It's based on the very successful model applied by companies like Franco-Nevada, Wheaton Precious Metals, and Royal Gold in the precious metal space. And uranium, of course, is a very important and strategic commodity. The US is the biggest consumer of uranium. 60% of the uranium in the US comes from Russia and former Soviet Union states. 1 in 5 US homes is powered by nuclear energy, so uranium. And the US doesn't have really any producing uranium mines. So let's look at the nuclear energy sector first. And one thing to reiterate about the demand for uranium is that China in the next 15 years, they're going to build more nuclear reactors that have been built worldwide in the last 35 years. So let's look at some of the major advantages of nuclear energy. Nuclear energy is clean, safe, reliable, and economic. Perfect complements to renewable wind and solar. Provides hedge against high natural gas prices. Saves lives and improves quality of life. As you can see, nuclear power is carbon-free, clean energy, and 55% of America's clean energy. Nuclear energy reliability is at 95% compared to other forms of energy. Global approval for nuclear power continues to grow in the EU and also in the United States. Support for nuclear energy is also strong and increasing. So Uranium Royalty Corp is trying to exploit that opportunity there because this is going to lead to higher prices of uranium. It's going to lead to a national security threat, seeing that the world is so divided now geopolitically. So the US needs to expand its production of uranium, and it doesn't have any. So UROY has first mover advantage. It has a very strong balance sheet with 147 million Canadian dollars. It has liquid assets in the form of physical uranium. They've got 6 million pounds of physical uranium that they have acquired in the last 18 months. They acquired it at around $42 of physical uranium right now. The spot price is around 50, so they're doing well there. They've got cash and some marketable securities. So it's almost also like owning a physical uranium ETF when you own UROY. So being a royalty and streaming company, UROY has virtually no overhead. They employ 6 people. And they're involved in making deals with companies, buying royalties and streaming deals with major uranium mining companies. UROY was founded on the TSX about 5 years ago. They listed on the NASDAQ a year and a half ago. And as I said, no one had ever taken this royalty and streaming model into the uranium market. And uranium, of course, the uranium industry is coming out of a really long, prolonged bear market. And the CEO of UROY, Melby, he says he hasn't seen a better supply and demand fundamental in the 40 years that he's worked in the industry. Last year, for example, demand for uranium was 190 million pounds. And there's only 120 million produced, so there's a 70 million pound shortfall there, or gap, output gap of uranium. So billions of dollars are going to have to be invested in the next few years in new mines, old properties that have been mothballed, not just in the United States and Canada, but also throughout Africa and Australia. So UROY has royalties and streaming deals with 15 properties. 2 of them now are producing, and 2 of them are one of the best mines in the world, Cigar Lake and MacArthur River in the Athabasca Basin in Canada. UROY also has a royalty with Langer Heinrich, which is a mine in Namibia. And historically, this was a huge mine, and it's going to restart production of uranium in early 2024. And in the US, UROY has royalty deals with ISR mines. And ISR mines are in situ recovery mines, which are very low cost mines. So why do I think UROY could be an attractive investment? And of course, this is just for informational purposes. I'm not telling you to buy the company, but I would say it's the only way to invest in a uranium royalty is through UROY, because it's not just the first uranium royalty and streaming company, but the only one out there. So the growth prospects are very good right now still. UROY is still looking to grow, to expand its counterparties in the uranium mining space. So you also have Rick Rule, Sprott Global, and Marin Katusa as major shareholders of UROY. Of course, Uranium Energy Corp is also a major shareholder. And then eventually there will be a second stages where a lot of the royalties that UROY owns start producing, not just the two that they have now. And then you get interest as well from institutional investors. Yes, and H.C. Wainwright has a price target of $5.75 for UROY. So yes, if you'd like to find out more about UROY, just go to the description of this video and click on the link below for the corporate presentation. So with that, I'm going to wish you all a very good rest of the weekend. Take care. Bye.